Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone past 1 p.m. here, which makes it midday UTC. Still getting used to the daylight savings, which I feel stupid about every year because it's only an hour. And the rest of the time we're in line with UTC as well. But a big shout out to everybody that's joined the stream today. If you're like me, maybe taking a little bit of time to adapt to the daylight savings time. Who have we got? MM. Good evening. You're over in Thailand, aren't you, bud? If my memory serves, which it doesn't as well as it used to. But yeah, good evening. Nice little afternoon time over here. And good morning to our friends over in America. So, today is Wednesday, so we're going to be looking at our altcoins. So taking some altcoin requests for you guys. Here we are again. QPS, yeah, they did. The bastards stole an hour from us. It's really, really starting to notice, actually. I need that extra hour in bed. C-Ron, my man, how we doing? Papa Legba, great name. Love that. How we doing, guys? Everybody here. So, yeah, good afternoon from the UK. We're going to take a look at some alts today. Obviously, most things, as we can see here by the Bitcoin chart, just got the analysis up that obviously we share with the group, but actually I put this out on Twitter as well with you all, and I think we kind of took a look at this on Monday as well. Peter McRaw, welcome, guys. Starting to all flock in now. Awesome. So, yeah, I thought I'd just take a little look at Bitcoin with you guys. For me, at the moment, we're very much up at this resistance area, okay, which is this thin green line. We'll kind of zoom out onto the higher time frames and take a look where I get that from in a moment. Just waiting for everyone to come in. Craig, hey, bud. There we go. We've got a really good crew coming in at the moment. All guys, before I forget as well, I'm not sure exactly how many more days Burb is running this for, but I wanted to share this with you. I'll do it again at the end of the stream. C-Rock, hey, buddy. I'll share this with you at the end of the stream as well, but the team over at the Bird Nest have got some really sick offers going on at the moment and some really cool competitions as well. So don't want you guys to miss out on that. You can get in there, just do some retweets. There's like $100 up. There's loads of stuff, plus 70% off any of the packages at the moment as well, which you can get down here if you go to the birdnest/bundle. I'll cover it all again at the end, guys. It's my bad. I meant to make more of a thing about it the other day. Loads of people contacted me and basically said they'd missed out on the deal. So it's been extended. All my fault. Yes, Craig, I have. Actually coming off the back of a nasty little chest infection, unfortunately, bud, and I just cannot seem to shake it at the moment. But it's all good. Nothing like the good elixir of getting back behind the charts, right? So let's zoom out a little bit, shall we? I don't know how much stuff I've got drawn over this chart. Hopefully it's not too bad. Here we go, nice and clean. So for me, on a high time frame, this looks really, really exciting, doesn't it? Right? In terms and from a bullish perspective, we've got drastically weakening dollar. Obviously, we've got a lot of news about that. Not really going to cover it in detail today, but do please check it out. I know Jay, Trading Tank, puts out an amazing kind of look at the week ahead from a news perspective. One of the things that we're dealing with at the moment with the dollar and why it's kind of a little bit tricky, and what I mean by a little bit tricky in terms of the correlation or the counter correlation we've always used with the dollar. No, it's not always correlated, but we have gone through a large period of time where you could look at weakness in the dollar and convert that pseudo into being positive for risk assets, right? And with crypto being a real kind of beta risk asset, we then look at the things like the S&P 500, and then the S&P 500 and NASDAQ's gaining strength with a weakening dollar, normally a really, really good sign for crypto. But the kind of decoupling has been a really, really key factor, right? So the strength in cryptocurrency, I was watching Bloomberg last night, and they had a really, really interesting piece on Bloomberg crypto. And I really, really enjoy that show. I think they're very, very subjective in the way that they look at stuff, and they're very, very pro crypto actually, and they have a lot of really, really good people on there. But what they're saying is that it's kind of contradictory at the moment because all the banks basically all blowing up, not physically, but in terms of all the mismanagement of funds that's been going on. This huge bailout that's now coming into place, henceforth, a big reason as to why we've got such a weakened dollar, is something to consider, right? Because while they're kind of coming out and there's a lot of noise and FUD about trying to trash Bitcoin at the moment and crypto, people are obviously seeing this as a much safer haven at the moment than a lot of other risk assets like the S&P 500, tech stocks. All of these things are getting a bit hammered, really, and it's really, really holding up well, crypto. So I'm still cautious, right? And I'll explain that as we go through. But it's very, very important that we don't let a bias affect, first of all, our technical analysis, but secondly, our trading plans, right? So we're going to look at the key support resistance level. We've zoomed out here to the weekly, and then we're going to crack on. Asher Burned, my man, how are you doing? Great to see you. Oh, Asher, unfortunately, I'm not the main man himself. BC Richfield had the pleasure of working alongside Crypto Burb, the one and only. So I'll try and live up to his standards of TA, but the guy is obviously a CMT level 3 master. I'm a little bit more of a simple price action trader, but hopefully there's something of interest for you here, and very much welcome to the stream. So before I rattle on too much, start to sound like a bloody talk show host, here's some levels I'm looking at. Now, something I find really interesting whenever I'm looking for kind of support and resistance, right? And, support and resistance very, very rarely works as clean as this. I mean, this is almost, ridiculously clean, right? Same as this line here. Look at it. This high completely capped this level until we've now had this big expansion through. And we can see the bullish strength in this candle, right? Look at it. Big body, hardly any wicks, big bullish momentum, right? And often when you've got these, you don't want to fade these right in the other direction. You want to let them settle, pull back, and then go on. It's good to hear the British accent. It's comforting. I tell you what, it's not blooming comforting living over here at the moment, Peter. It is a country on its way out by the looks of things, unfortunately. Burned, doing profitably, that is awesome. And C-Ron, I am the tea master. Well, not the master, but I do drink an alarming amount of tea. In fact, just so that he can bring you in on the sound effects, you can... There we go. Pouring a brew as we speak. So, what does this all mean? I like zooming out onto the weekly chart, right? Because quite often you find that people get too kind of caught up on the lower time frames, right? As we start going through the lower time frames, you'll see how much noise there is, right? So while we're within this, we can see things really, really clearly. We can look at the strength, we can look at the weakness, we can look at key targets, where price is reaching for, right? So I'm using the daily and the weekly really for key levels, but also saying to myself, okay, look, if price is now getting comfortable at this level, right? If we're holding this, if we've flipped this now to support and price is looking to push up, then where are we looking to push up to? Now, I'm looking for liquidity resting above key highs and lows, okay? So swing higher here on a weekly scale, I think that will be a key area. We have got this order block here, right? I like using the bodies of these candles. And we've not quite reached that yet. But what's capping the market for me? So this was a key level, right? Why did I pick this one? Because something clearly stopped the market here, right? And this was kind of capping the downside. Came in, strong reaction, came into it here, held here, and then the next candle opened. Looked like it was going up and then just absolutely ripped through it, right? We've now had a very, very strong move through this again, a lot of expansion. We've now come back onto here and we've tested this as support. So it's very, very hard not to be bullish at the moment. One of the things that I was looking for was maybe a little bit of a pullback here, a deeper pullback into this fair value gap. And actually, because I've got all the other stuff on, let me just zoom right in and we can see that this wick here, which finishes here, just literally nipped into this and had a hugely strong reaction, which again is a very, very bullish sign, in my opinion. But as we can see here, the reason I've got this line on is this, for me, is the level that's capping the market, right? Because when we set this on the 13th, this weekly, and then we had the weekly close going into week starting the 20th, we can see this wick hasn't been closed above, right? Now, we've come up here, kind of not really swing found it in a big way, but we've come up, taken the liquidity, then pulled back, right? Then price has had a recovery, prices come up again, looked for liquidity lower, and then we've had that expansion higher. So really, when we start to look at the daily, we can see this as a little bit of a sort of compression range, all right? So we're going to take a look at that. We can see we've got our mother bar marked out on here as well, which we're going to look at too. So let's get a little bit more detail, which we're going to find on the daily chart. Just pick up a couple of bits and pieces from the chat and take a sip of my tea. Good to hear a British accent is comfy. Lived in London for more than 10 years, McRaw, hardcore. Yeah, I lived in London for a while. And Peter, that sounds like a delightful move. British, but lived abroad for 25 years. Fantastic. Yeah, I think I love to travel, right? And yeah, I don't. I'm not going to get into the political side of things, but not that I've ever really had much faith in the government, but it's all getting a little bit ridiculous now, and there's a lot of nicer places to live in the world. So if you like London, you like England, brilliant. There's a lot of other really nice places to live in England as well, right? Like just spend a little bit of time in Suffolk, which is just a magnificent county. So Craig, here we go. Welcome, time traveller as well. I'm not George, but can welcome George, and that's maybe a little bit of a nod towards the US dollar. Craig, how do you prioritize recency versus a liquidity pool? Last week was looking at recent lows, but price went to lower levels that were a few weeks ago. Brighton, awesome, mate. Yeah, Brighton's a lovely place. Last week was looking at recent lows, but price went through to lower levels that were a few weeks ago. So what I'm doing is I'm looking for liquidity, and then I'm looking for how price reacts when it gets there. So I want to see interactions with key highs and lows, order blocks, price pulling back into inefficiencies, right? So an example of this is what we've got on the chart at the moment, and it's not the greatest example on this time frame. You'd need to look at it on a lower time frame, but we see how price was drawn down, even though it was only this little wick here into this daily fair value gap, right? That set Monday's low. What I was actually looking for was, bearing in mind we're still in this range of this mother bar, right? So this is our mother bar pattern. This is our inside bar, yeah? So the pattern itself is called an inside bar pattern, and that's where you get the large candle like this, or any size candle, but the criteria is the following candle, high and low, must be within the range of the prior candle, right? What we're then looking for are the highs and lows of this candle, which becomes the mother bar, which is the large candle, and then this candle here, right? Which is our inside bar. And once again, when we're looking at this down here, we can see what a significant role these candles play. Now, the reason that I like trading candlestick patterns, and inside bar being one of my absolute favorites, is that they're very often a sign that price is starting to consolidate, okay? So you have this high and low, the fact that you've got an inside bar, and quite on this one, it's an inside day, right? So you've got this day is within the range of this, right? Now, how we play this is when we run the level, we start with our inside bar, which are the thinner red lines, yeah? When we run a level with any range, if we get back within the range, we then target the far side of the range via an EQ, all right? So the equilibrium, which is just the 50%, you can just get that using a fib. So the EQ is here, right? Now this is the EQ for the inside bar, okay? And what we can see here, and we'll see this even clearer as we drop down onto the lower time frames, is price contained within this range, right? And it still is. It's still absolutely contained within this range, right? Look how we've had these wicks. We had these perfect body closes back in the range. What did we get here, right? So this is when the pattern was set. Price deviates the low, comes back inside. What did I say that we're looking for? When that happens, yeah? Because, look, what's happened here is price has opened, come down, closed, coming to here. We've run the low, come back, trade to the midline here. Price has run the low again, come back in the range again, right? Yep, we dipped back out of it again here. We've come back in through to the midline. And now my expectation is for us to take the highs over here. Obviously, beyond that, we've then got the mother bar high and low, right? Which we noticed. The reason that I was expecting a bit of a stronger reaction from this one here, okay, is because you can't draw circles on the higher time frames on this, can you? It looks rubbish. But look, this area here is because we've run the mother bar low, right? Which is this one. we haven't touched that from terms of a high, and we haven't touched the liquidity resting above the inside bar high either. So for me, it seems like that's a logical place to go. However, we've also, when we drew this in, remember from our weekly, that's what's currently capping price. Yeah. So we can see we've had attempts 1, 2, 3, 4, and now this is our fifth attempt to close above this level. So if we do close above this, then I think there's a much higher likelihood that we do take out the liquidity resting up here. However, excuse me, we need to appreciate that currently we are in a range-bound environment. Okay, so let's drop down to the 4-hour. And then on this one, let me just get rid of this. Okay, this is where we see the range a lot clearer. Yeah, so remember, this is our midline from the inside bar. We can see what happened. Price came up, deviated the lows, came back in, found the midline. Yeah, couldn't get the close and the momentum to build above that, and then we sold off. Now, when we sell off, that's when I'm looking for liquidity lower down, right? Because I'd say, okay, if there aren't buyers up here, right? So basically, I certainly always think about this as transactional, right? I think it's the simplest way to think about it. If you've got something that you want to buy, you need someone to sell it to you, right? If you've got something to sell, you need someone to buy it from you. Markets are obviously that in their essence. So people here just aren't happy to buy, right? They just don't think that it's a value buy here. So what happens is, as price fails here, people offload their positions, and price then goes looking for liquidity lower down. So where do we look? We look areas like this, yeah? See these equal lows here? This low, and ultimately the mother bar low down here, right? Now, why do we target these lows? We target those lows because that's where liquidity is resting, right? Or to put it in another word, if you've got people that were long from here, yeah, this is where their stop losses are, okay? You also have breakout traders, yeah, and bots can be programmed for this, and algorithmic systems as well, that getting price moved below can trigger orders. So what happens here is you get a lot of sell orders, right? So people that were long, their stop loss is a sell order, yeah. Breakout traders looking for price to push lower because it's gone below a key level are also adding sell orders, right? So what happens is you end up with this big pool. Let's just draw it in so we've got some visual, yeah, in red. So that's all these sell orders, right? So this is people looking to sell. Now, if you're a major player, banks, hedge funds, then you're going to be placing huge orders, right? And to fill those orders, you've all seen it when you fill orders on your exchange and you see you don't just get one price, right? There's slippage in there. You're getting filled because for each of your order, you need someone willing to meet the other side of that, right? So when you're talking about huge orders, then slippage is a real problem. And not just slippage, but actually getting your positions filled at all. So the best way to do that is to find a lot of very, very willing sellers, yeah, for you to buy into. And all of these people down here, all your stop losses, all your breakout traders, all the people looking to squeeze this lower are providing those orders for you. So the big players can then step in and say, thank you very much. I'm going to take all of that, all of your sell orders, and fill them with my buy orders, and then price gets moves like this, right? So that's why, for me, I'm always focused on where's liquidity resting, okay? Now, the next part of the equation is how price is moving to those levels, okay? So I'm looking for premium and discount within a range, okay, which we're going to look at on the slightly lower time frames. And it's a very, very simple concept, like any kind of range. And I like breaking things down into ranges. It sits very kind of clean with how I think about it. But premium discount, and then we're also going to look at our fair value gaps, right? And then I just want you guys to let me know if there's any altcoins and bits and pieces for us to take a look at. So give me 1 second. I'm going to blow my nose. I'm starting to sound more and more like a cartoon character. Hang on. Right, there we go. I'm not sure that's helped at all, but I do feel a little bit better after it. So, inefficiencies, fair value gaps, how we look at them, what we look for with them. So, any bearish fair value gap that we have, yeah. So that's where we have a gap. See these three candles? 1, 2, 3. See the wick on candle 1 and candle 3, yeah. Let me do this in red to signify that it's a bearish fair value gap. We see this, yeah. what we're looking for with this is then if we expect price to go lower, right, which we didn't in this instance because we were expecting a reaction below these lows, but we expect price to draw back towards these fair value gaps, right, for the market to rebalance. So what we're looking for is if we had a bearish narrative here, this is where we're looking for price to reverse, all right? In the same way, which we'll look at on the bullish side of things, is that I've got interest in this area here as a bullish fair value gap, right? Because this candle's closed now. So we've got a 4-hour inefficiency here, which is a fair value gap, all right? Then we're looking for price to draw down into here. And if we expect higher prices, then we'd be looking for something like this, yeah? For price to come into this. And then we'd move to the lower time frames, right? And then we're looking for price to move higher. Now, what I'll show you on the lower time frames, because it's a lot easier to draw, is the pattern that we're looking for, all right? And that's for price to take out a low, come back above it, and move with displacement, which is energy, right? Leaving an inefficiency in the move away, which is an area that we can then target to fill our long orders in this case. Craig, what have we got? CRV or FTM? Look at the smaller coin, Hbar and VET. Yeah, of course, mate, certainly. In fact, look, I'll just very quickly finish up here on Bitcoin and then we'll throw across onto those assets, right? And we'll just strip the charts down and do the top down and we'll spend a bit of time looking at, let's go for FTM and Hbar, shall we? Yeah. So I'll show you the other bits and pieces on there, but basically this is how I'm seeing the market, right? I like to see it in ranges where price is compressing. If price is running, no problem. You know, if we're trending, for example, like we do here, sometimes you just get these moves that are so fast, right, that they just blow you out of the water and you don't always get a chance to get on board. However, if you're patient, you very, very often can find little opportunities, all right? So if we just very quickly look at this, this is when we took out market structure, right? So this is where we've had our shift. Why? Because we've got the high here, it's a lower high, but this is a higher low. The break of this, yeah, makes this our market structure break. Now, this move that we have away, like we said, we want to see a move, an impulse move, an energetic move with displacement. And displacement means leaving a fair value gap, right? So, like we said, if we're looking at this in terms of bullishness, right, which we are, because we're saying, okay, well, look, price has come up into this area here, right? First of all, we haven't taken out this key high. So as we've kind of pulled back from this, don't get me wrong, there's a lot of liquidity resting along here, right? A lot of liquidity resting. But with the conviction that we've got, and when we zoom out on the higher time frames, we know really this is our kind of target level. And then we're looking above to this level as well. And what I really liked were these relative equal highs up here. So when price makes this inefficiency, we can then look for it to pull back into it. And then on a lower time frame, I'll show you this very quickly so we can just, when we zoom through the other coins, I won't take as much time to explain it. We'll just kind of rip through it. So as we then move down through the time frames, yeah, we'll move down from a 4-hour down to a 15-minute here. We're just simply looking, and I do this on lower time frames, right? But I know a lot of people don't, have the time to be able to sit behind the charts for the long periods that it takes when you're trading sort of really low time frames, 1 minute to 5 minute basically. So price is fractal. So I want to show you guys that, you can build these type of systems out, 15-minute trigger, every 4 candles, you've got an hour to react, right? So our rules are that we want to see a sweep. Yeah. So we want to see some key liquidity taken. Remember, like I said before, we can see here, right, that something stopped the market there. That's the cap. Big reaction here. Price has come up. Then when it's ripped through it, we've then had that bullish reaction showing that we've taken out the liquidity here. And the sell orders here have been turned into buy orders for a move higher. What then we need to see, is our market structure. Now, either a market structure shift or a market structure break. In this case, we have a break, right? That's because we've got higher low. This then makes the higher high, right? A shift is if we didn't have the higher low and we've just broken the high. Either, for me, is fine, but the key thing for me is I need to see displacement, right? So that energetic move telling me that price action is ready to go higher. And we've got that here, right? Boom. Here's our fair value gap. This gives our opportunity to enter. And you can put your stops below here. If you're worried about these potentially getting taken out, you can go safer and have your stops below there. However, personally, yeah, I'd be looking here, because if we notice this key high, again, always looking for where liquidity is resting. Yeah, see how we didn't quite take that out? Just stopped short of it here. So as price has come back down into here, then we've kind of got a pre-made area that we're looking for price to move beyond. If we started to really stutter and break down here, then for me it would be a sign that maybe we don't have that momentum to take us higher, meaning that you can kind of get out of the trade or you can move your stops up. Yeah. So first of all, what I'd be doing is looking for the origin of this to this, right? And then I need this to be in the lower 50%. So let me do it like that for you guys so you can see it. So this is our displacement leg. This is the leg here from this low to this high that took out and broke market structure. We then had our bearish candle here, which closed. So once we get that, we're then looking for entries here. We just want to make sure that we're in premium, that we're in discount, which is the lower half of this range. This is just a range for anyone that wants to draw it in with a 0, a 0.5 and a 1 on it. And then if you draw these colors in, you can go down to here and just tick background, and then it just filters, it puts them in for you so you get it. It's just a nice visual representation. When I'm doing it personally, I use that just so it's very unobtrusive. Collins Pasta, hello, welcome. Quick question here from C-Rock. If you would have longed today's pump, what would have been your setup? Cool, all right, really, really good question. So let's just very quickly get off of this and then I will tell you. So let's have a look where price currently is. So first of all, I'd be looking here, London Open. Right, no, my favourite trading sessions are through New York, the New York AM and PM session. Asher, Hbar going crazy, as I said to chart it. Brilliant. Well, give us a heads up next time, yeah? Any coins you're looking at, and we'll make sure to look at them a bit quicker and see if we can get on board. So at the moment, I actually don't really think this gave us a lot of opportunities to get in, I have to say. Let's just get rid of that for a second. Now, you would have either had to have been... Really, the move here was yesterday, right? We can see here, first of all, this depicts the AM trading session, right, for New York, and then the PM trading session is depicted here, right? So I like trading those sessions because aligned, obviously, with traditional markets, it's there's a lot of volume comes into the market, right? So this would have been our point here. This is the range that was drawn out, and I'll do it as the PD range for you guys so you can see that a bit clearer. Now, remember, this is the displacement leg, yeah? So what happens here? We take liquidity and we break market structure, yeah? We take out both of these highs. So then we're looking for an entry in a fair value gap, but the fair value gap has to be in our green box, right, which is discount. So the fair value gap that sits in this box here is this one, and we've also got one above it here. All right. So they represent our entry areas. Yeah. We can see price comes up, comes back down, gets into our entry area here, stops below the price swing low, and then we're trading it higher. For me, there's not been an entry today. In fact, I was just speaking to the team about it because the move was just too quick, right? So we can see here, see this expansion, right? We never came back down into this. Now, there's a chance that obviously this is the move here that price is putting back into. This would be our bullish fair value gap. But I don't like the risk to reward on this, right? We've got potential key resistance here, here, and we could be closing back underneath this level. So I'd really want to see, I'd really, really want to see something above here, yeah? Or actually looking for reactions here and potentially playing just some scalp shorts back into a key area that we might then be looking to long from. If price comes back from here into this area that we just discussed, yeah, a higher time frame fair value gap, and then if in here, you know, price comes into this area, right, be nice, even if it kind of holds this fair value gap within here. What we want to see, right, is something like this, where price takes liquidity and then we have that impulse move higher, right? And the key thing here is that we're breaking market structure. And within this move higher, we want to see a fair value gap within our range. Yeah. And then we're looking for price to trade back into that. And then we're looking for higher prices. All right. So that's what we'd be looking at. Long in the 12-hour breaker after a H1 swing failure pattern and a 1 hour market structure break. Nice burn. Yeah, no, yeah, exactly. You can absolutely take those breakers are very, very reliable, especially in crypto. So what Burn's talking about here is let me see if I can find you one. So technically, it would be something like this, right? Now, it's not the cleanest one in the world, but just as an example, what you're looking for is a purge on liquidity, right? So price to come down and take out a low. So we see this low here gets taken out. Price comes down. Now, what you're looking for here is the last up candle, the last bullish candle before the purge on liquidity. Like I say, I favor the bodies of the candles, right? But again, I'd always recommend just do your own testing on that for bodies, wicks, and bits and pieces. But that up candle that drove price lower, then when we close above that, we then look to go long on the retest of it. All right. So if you were a late bird last night and you were up trading kind of around Asia, that was a nice little move that you could have got on board with. I do trade breakers, especially in crypto, but I actually pretty much most of the time I'm trading pullbacks into fair value gaps. So Queen, welcome, buddy. Always great to see you on the show. Always gives me loads of roses. I absolutely love that. Thank you. So positive. McRaw, you're very welcome, mate. It's nice to share with you guys. And like I say, I'm a pretty basic creature when it comes to trading, but it's kind of, I don't like to overcomplicate things if I can. So bullish breaker are 10:30 a.m. today on the 15 minute. Is that I spotted? I think then got stressed because it went down after. All right, let's have a quick look what we've got. So 10:30. Not quite, mate. What you'd want to see here is, like I say, you'd want to see a purge on liquidity lower. Yeah. I mean, obviously, you can find these things on any time frame, right? So price is fractal. If you're moving down to, say, a 1 minute, for example, let's have a look, see if we found anything on this time frame. What you'd be looking for, and I'm not advocating people do this on the 1 minute, and actually this is a really, really good example of why we need our high time frame bias, because if we're hunting too much on the lower time frames, then it can just get a little bit sketchy. All right. So here we can see liquidity's taken. Yeah. Price comes and takes out this. It kind of takes it out here, really. And then you've got this tiny little up candle in here. That would be your breaker. The up candle before the purge lower, price then goes higher. You always want to be careful with these type of retests if you're taking out key liquidity on the way up. Yeah. Because you might have already taken the target and then you find a move lower. You get a little bit of a reaction here, but then ultimately price comes down and would have taken you out down here. But aside from that, mate, I can't see a breaker there on Bitcoin this morning, not on that 228. Let's have a look. Thanks, C-Ron. Yeah, hit up the likes, guys, if you're enjoying it. It's always really well appreciated. I am game. Hello, and good morning to you too, my friend. I'd love some thoughts on alts like Doge or Shib. All right, let's have a quick rip through three then. What did we say we're going to look at? We're going to look at Hbar, FTM, and we'll throw... Let's have a look at Shib, shall we? We haven't looked at Shib in ages. All right, so we are... What have we got? That's not bad, actually, for me. I normally waffle more than this. So 25 minutes. I think we can do three. Load up on some tea. And we're ready to rock and roll. So let's start with Hbar. Where are we? Hbar. Let's hide the rest of this. And there we go. We've got ourselves a nice, clean chart. So, weekly. What is Hbar up to? Oh, Christ. That is, you see this on a lot of these alts, right? Wow, just a massive slide. And obviously, guys, remember some exchanges get these coins at different points, right? Especially ones like that. So when you're going on there, then make sure that you can find older charts to do more historical price action. I'm trading with Bybit for that, and in a decentralized form with Apex. So if you guys are interested in either of those, you can find some details and get some offers and bits and pieces in the description as well. But you can use historical charts. Some like Coinbase, for example, or index charts have a lot more history. But for me, I'm much more interested in what's happening right now. Okay. So we really want to zoom in. Yeah. And this is giving us our real kind of key high time frame view. So where is price looking for? Where's it reaching for? Yeah. And that's what we're asking ourselves, right? Where's the key highs and lows? So if we're looking at this on the upside, that's a key level for us. What are we looking for in terms of moving lower? Well, a couple of things. And one thing I really want to draw in here, because especially since we've been going on about it a lot, and I'm just going to, normally I have the fair value gaps as grey boxes when you see it on my TA, but just because it stands out a little bit more, I'll do the bullish ones as green and the bearish ones as red, right? So once again, just showing a bit of patience here. Remember, this is the same across any time frame, right? So what we were just doing on a 1 minute, we're now doing on a weekly. It's exactly the same. And what did we say we wanted to see? We wanted to see an impulse move, yeah, breaking market structure after taking out some liquidity. So here's the liquidity, yeah, that's what we've run. Price has dipped down into this again, getting people's stop losses down here, getting breakout traders on the wrong side, filling all those big buy orders, right, for the major players, and then price expands higher. So if we didn't get an opportunity to get in this move, right, then we want to be looking for opportunities, but we want to look for those opportunities on our terms, right? And that's really, really important. So here's our expansion leg, yeah? And how do we know when to draw these and when to stop them? Well, I just wait for the first down close candle. And if it was going around in the other way, then I'd be looking for the up close candle, all right? So as we have here with our bearish example, do this one in red. We can see what happens. We get our displacement. Price moves lower, yeah? Takes out this low. Structure comes down. We wait. We don't need to FOMO into this. We get our up close candle, which does draw into here. So from this moment on, we can then monitor this on a lower time frame, look for our breakdown patterns, and then we're just simply going for the low hanging fruit, right? So our first target would be these lows, and then we'd be looking historically for other lows. And if we're getting into price discovery, in this case, we're getting into negative price discovery, right? Then we can use other methods to measure the moves, right? Measured moves, you can use Fibonacci's, all right? I don't know if anybody uses Fibonacci extensions, but you can use those. But realistically, what we're looking for is saying to ourselves, okay, as price is purging lower, we just want it to respect market structure. When it breaks market structure and we monitor that on the lower time frames, that's when it's time to kind of step away. And there is an absolute legend in the chat, in Trader Jimmy, your NLP coach, a very, very dear friend of mine, a fantastic trader and a world-class psychologist. Lovely to have him in the chat and bigging up the stream. Welcome, Jimmy. Great to see you. And thank you so much, everyone, saying about smashing up the likes. Really glad you're enjoying the stream. Yeah, QBS was in here as well earlier as well. Having all of the legends come in today. It's just been an absolute joy. The day that I sound like some kind of weird cartoon character full of cold, but maybe that's why they've come in, actually. No, they're such great guys, and all my fam over at the Bird Nest, I can't speak highly enough of them. Do go and check their stuff out. Magnificent bunch of traders to work with. I absolutely love it. But before I digress too much, this is where price is now at, right? Here's our displacement range. So I'm just going to leave that there. So again, we know from here, yeah, we're in the lower portion of this, yeah? So we're in discount. That means we're looking for inefficiencies and areas that we can go long. So for me, this is really, really key. Now, one thing that we do want to notice, right, I know we're still here on the weekly at the moment, but we've got this fair value gap here as well, right? And what we can see is when this fair value gap closed, price came back up into this, yeah, and now it's had a little bit of a sell-off. So we need to remember this is on a weekly scale, guys. So we're going to really kind of drop this down and look at it a little bit closer as we go down, first of all, into the daily and then beyond. But this is really to show you that we're using just overlaying this same methodology down through the time frames, right? So we're looking for good areas that we can take trades. And for me, this is a nice area, right? Looking to long this, we've had this expansion higher, price has started to cool off, it's come back down into here. We've got our weekly level. We know that we've got a good value from here, but it doesn't mean that we're just going to jump straight in, right? So what else we need to do here is just mark up some key levels. I think this is the liquidity at the lows. Yeah. So that's our next key swing low. Why? Because it's flanked by two higher lows. Okay. So as price comes down in, fills this inefficiency some more, we've already got a kind of good idea starting to build on how this can look. So now we move on to our daily. And we can see here, this is the leg. Why? This is the break of market structure, price to go higher. This was the breakdown in market structure here, price coming lower. Now it's kind of coming to our area of interest. We can see price drew back into this bearish fair value gap, on the weekly, and then price has started to sell off again. However, it's showing a bit of strength in here, right? Normally if this was in a powerful downtrend, you get a move into here. If it was very bearish or if there really weren't the buyers stepping in, I would have expected a slightly deeper purge. So for me, I'm looking at this down here and saying, okay, well, do we get a move down into this to really take out any people that were long here? Yeah, take those stops, generate some more orders, and then price looks to push up. A very safe way to look at this, and again, this is on a daily scale, is to look for these fair value gaps to be flipped. Yeah. So this is a bearish fair value gap on a weekly. So I would label this up as FVG and then a small W to depict that it's weekly, right? And then I do the same with this one. But now we're saying, okay, well, maybe price is being drawn back into here. That can give us in itself some nice scalp opportunities or some nice day trade opportunities on the lower time frame, all right? So once again, we can see price holding here, moving up towards our bearish fair value gap. If we wanted extra confirmation here that price is really looking to kind of hunt down the liquidity up here, then we would want to see this bearish fair value gap run through, retested, and then we'd have greater conviction that price is going higher, all right? Because if this is the area that should be suppressing price, the same way as we would do with an order block or any support and resistance level, we can flip that and turn a negative into a positive, then that just gives us a base to build from and then to move higher, all right? So that would be my thoughts on that. We'll drop down to the 4 hour so we can look at this in a little bit more detail. Turn that back to red so we don't get confused because we certainly haven't flipped it at the moment. So on a 4 hour scale, remember we were talking about in terms of our patterns, and this will all depend on what time frame you're trading on. You need your high time frame bias. You need to then decant that down onto lower time frames to look for your execution. So let me just do this as I do, because I really do not trade the 4 hour very much. All right, I move down normally to an hourly because most of what you will see on the 4 hour is just shown, but with a little bit more detail on the hourly. Okay, so what we had here is an example of what we're looking for, right? When we talk about this move. So we've done the same on the weekly, same on the daily, 4 hour we're looking at. Now we're down on the hourly. We're looking for key levels. So you want to see a sweep. We see this low here. We zoom in a little bit for you. This low taken out. That's where we get our structure break. Or shift actually. So this is to show you what I mean by shift. Because we don't have the higher low before we set the higher high, this is a shift, not a break, okay? What you'd want to see in terms of a break of structure is where you come in and you set a higher low, So if you're looking to the upside, you want to see price set that higher low here, and then the break of that higher, is your market structure break. What you notice with that here, right, is we've actually got a lower low down from that, so that this becomes a shift. So for me, I'm happy to accept either. It's all about the fact that we leave displacement when we move higher, okay? So we need to see the shift or the break, and we get the shift here. Do we get displacement? Yes, we do. And that just means that we leave these inefficiencies when we move higher, right? Because that's just showing that, for me, it's showing that the buyers have stepped in. So then it gives us this opportunity to go long in here with our stops under here. And again, excuse me, if I'm seeing this high here and price coming back down to here, well, this is my first key point of liquidity, right? So when I'm posting a long trade, I'm saying to myself, okay, price is coming to our area here. We need to put our stops under the swing low, which is there. What kind of risk to reward do I have at 0.1? Have I got 1.5? Yes, I've got 1.67. For me, I like to have the first target at 1.5R because at that point, if I want to limit my risk, right, then I'm moving my stop loss to entry. Yeah. So then I can trim a little bit off the trade. I can leave that in there then to run to higher targets, which we'd be looking at this cluster of liquidity over here. See all these relative equal highs. Something stopped the market here in line with this. This is a key area for me. Look, good sell-off, origin of this even larger sell-off, right? So we'd be expecting some kind of interaction with price here, meaning that our extended target can follow up to here. All right. So that's how I'm looking at it. Obviously, that wouldn't be in red. That would be in green as well. I don't know if it will really stand out above. So same here when we were short, right? Here's our break. And this is actually our market structure break because we come down. There's our low, lower high, lower low, right? So in that break, our displacement leg, we look for an inefficiency in here. Price comes in very, very choppy here. But we do ultimately get our sell-off down to our initial target, which would be this one, which we meet just down here. So what are we looking for here? If we wanted to trade this on the hourly, we'd be looking for the same, right? So our trade here would have been, let's have a look. We wouldn't have had an opportunity to get in today, unfortunately. But like I said to you before, as long as we're monitoring the charts, we're looking, we see this bearish fair value gap here, right? So before this price action played out down here, price is purging lower, right? What I like when we see these kind of wicks on candles, yeah, you're seeing price get bought up, right? You're having an aggressive reaction here. Then as price comes into here, this is where we get our market structure break, right? We're coming off the back of a higher low, so this is a break and not a shift. Price comes up. Do we get displacement in this leg? We absolutely do, right? So price moves up here. We get our fair value gap. Once again, what we do is we're taking the displacement leg. This is our first down close candle. So we take it to there. We're then looking for the inefficiency that sits in here, and then we want our stops below the price swing low. You could put it under there, but I think it's just a little bit too deep for me under there. So I'm looking at these ones in here for my entry, and I'd be able to get my initial entry in here. Okay, let me just get rid of that now. So here's our entry. Stops have to go below the price swing low. Where's our initial target? This is the first key swing higher, right? So once again, we just want to make sure that as price drives down into here, this is where we take our entry. Stops below the swing. Always do it just a couple of pips. And then do we get a 1.5 to our first target? 1.6. So again, that would be the that would have been the entry into there. Unfortunately, at the moment, as we can see here on the hourly, price is running pretty hot. We're coming into these relative equal highs here, right? Which is maybe what's just kind of stopped price here. But sorry, to go back before I forget this, if you wanted extra confirmation, right, this should be acting, yeah, as resistance here. Price should be coming into this. If it was looking for lower prices, we would expect it to come into here and then sell off. The fact that we've just kind of ripped through it, held it, ripped through it again, we see that we've got our confirmation here, right? We see price starting to hold. If you wanted extra confirmation, you waited for this move higher. Not quite sure you'd get the pullback into that. Oh, you just have missed it, right? Because it just wouldn't have come down here into discount. So we would have been targeting that fair value gap. And we can see, obviously, price had that expansion high without us. There was just too much energy, too much bullishness in there as well. McRaw, could you please enlighten us with your laddering strategy, especially when you're using different levels of leverage? So laddering, so is in terms of kind of scaling in to trades over time. Is that what you mean? So if I go down to, say, a lower time frame here, and we're talking about this move up, then just for argument's sake, we would say that we saw this move down again here, right? And let me just get rid of these while we're on here. Right, so here's the expansion higher. Let's say, for example, we were targeting this fair value gap here. Okay, and then we're waiting for price to come into this, break market structure, which happens here. Here's our shift. Here's our displacement leg. Here's the fair value gap in here, right? That sits down in discount. So that's our entry. We have to respect this swing low here. It's down low enough for me, actually. I normally prefer to go a little bit under it in case we get that kind of deeper purge, but always just leave yourself, or don't always do, obviously, whatever suits your strategy, right? But I always leave it a little bit below. And then we've got an initial target here, right? So let's say, for example, that's our initial position, yeah? Now, as we're moving away from this, and price is going higher, the key thing for me when I'm adding to a trade is I need to know that I've got targets further up. Yeah. So when we came into this, that was our initial target. So I'm just going to do this with one of these rays. Yeah. And then I'm just going to mark where the other key targets are, where we're looking for in terms of liquidity, right? And we're going to leave that last one where it is. So let's say as we're running through, we're saying to ourselves, okay, our initial position is here. This is where we want to see price run to. Now, we're obviously going to be taking profit as we're moving through the trades, right? So we always want to be booking profit, right? For me personally, I'm happy to take wins little and often, make sure I've got that profit booked rather than trying to hold these things for monster returns and then kind of getting caught on the wrong side of it and end up losing a lot of it. So what do I want to see? I want to see price telling me that it's getting ready to move to higher prices, right? So this is our initial interaction here, right? And we can see price comes up, we get this corrective move. That's because people that are long here or lower are starting to take some profit, right? And there's also stop losses up here, again, like we were saying, for people that were short here, right? So their stop losses are up there, and you basically end up getting this little bit of a reaction. However, it's clear to see that we're showing a lot of strength, yeah? So let's look at what's really important. Where's our next target? Forget about all the noise. Just say to yourself, where's the liquidity resting next? It's here, right? It's this line. That's what we highlighted from before. That's where we believe there's key stops resting. So we're saying to ourselves, right, that's where we expect price to go. We don't expect price to just stop in the middle of nowhere. We expect it to reach higher targets. So how do we get involved in this move? Let me zoom right in. First of all, we've had this big impulse move higher, right? What do we say we want to see from a move? Yeah, we want to see a shift in market structure, right? Doesn't mean that we have to be bearish here. This has broken the next higher, so it's continuation, right? What we need to see for the continuation is displacement. Do we get displacement in here? We do see this big fair value gap. We want to mark that part in there because that's the part that's down in discount. We know where our target is. We're expecting price to run up to here. So what we need to know is, okay, if this is our entry here, our stop, for a move like this, when you have a really large expansion, right, you can put your stop under the origin of the fair value gap here. It is slightly more aggressive though, right? So you have to be aware of that. That would be the safest place for your stop. Yeah, just under here. But again, it all comes down to your risk parameters. For me, I'm saying to myself, okay, if that is, I'm probably not going to take this trade at a 1.36. I would say to myself, okay, if I'm ever within any doubt, I have to have conviction in the trade. If I'm worried about the size of the stop loss, then I'm just basically going to say to myself, right, I'm happy to play this with a bit more risk and put it under the origin of the fair value gap, but I would probably reduce this to half a position size. Also, when I'm compounding trades, I'm never entering this is your full amount. Yeah. This is normally half of this position size. And if I go in again further up, then that's going to be half of that position size, right? It's meaning that the majority I'm keeping in here, that if I'm wrong as I go further up, it's not going to damage me, all right? It's not going to damage me anywhere near as much. So what happens here? And actually, was there a little sneaky area we could have got in here? Yeah, there was, right? So we've got that into there. So we've taken some profit here, yeah? Now, what we're saying to ourselves is, well, first of all, we've got another trade here, yeah? Because we haven't taken this out, right? See this? It didn't quite get there. So for me, I'm happy to then trade this again as long as I can get the risk parameters right. So what I'm saying to myself here is, okay, this is the displacement leg higher. Yeah. Why? Because we've taken out this high here. So once again, if we put that on, we say, okay, where do we want to go? We want to be targeting down in discount, which is down in here. Do we have a fair value gap down here? We absolutely do. And we just sneak the cheekiest of entries here, right? You guys see that okay? Just kind of dip down into it here. That would be our entry. A stop loss would have to be under here. There's nowhere else it can go. And then we just sneak in at a 1.59R. So I'd be taking that happily, all right, because it hasn't touched there. This is a pullback. I think a lot of people will be trying to get short here. So for me, not that you always want to fade the masses, but it gives you a good opportunity here. And then you get another one here as well. Now, once again, we've seen price come up here. We've had a little bit of a rejection here. Price has come up again. But for me, I would be expecting, and this is a good thing that I learned quite young in my trading career, actually, that still rings true today. If this is a support resistance level or something you're looking for price to interact with, then what you want to see is violence in that reaction. Meaning that if price is coming into it and we're bullish, yeah, you don't want to see price kind of do like this, yeah, maybe kind of come up a little bit and start hanging. It's just not showing that there's real key buyers in there, right? What you want to see price do is coming to a level and have that immediate aggressive, energetic move away. All right. So when we don't get that here, see price just kind of comes up. Look at this. This is the difference. Look at this level. Price comes into this ping. You see that move away. It's aggressive. This isn't, just kind of meandering here. So what you can say to yourself here is, bearing in mind you've compounded your trade up to this point. So you've got a lot in here, right? You've got this thing which is still running at the moment that's now clocking you around 8R. Yes, you would have taken profit on the way up, but you always keep a little bit of that because your stops are at entry now, so you can't lose that. Your stops are at entry at this one as well, so you can't lose that. You've got this one running. You're saying to yourself, okay, if we're really going to kind of smash this and reach for higher prices up here, then we just look for exactly the same thing, right? We've had our break here. This is our kind of displacement leg here that's taken out market structure. So we've been here to here. And depending on how you do this, and you absolutely must test this, because you've got to ask yourself, are you taking it from the breakdown here when price then moves higher, or are you taking the whole leg from when there's a shift in structure? Yeah? So that's something that I'll leave up to you for you to decide, right? But you're either taking the leg, as in from when you've had your last down close candle to the expansion higher, or you're taking the whole move, right? Either way, your stops would be under here, and you'd be looking for your fair value gap, which you've got in here. That would be your trade entry, and you would have, this last one would have been an absolute ripper, actually, because you're coming up into there. Now, obviously, as we keep going up to further and further targets, the risk increases that you're going to get a corrective move, right? Because if we now pop back to our hourly, what we're saying here is, okay, well, if we can get above this, right, then our next target's here. So we see we've had this big move up. What can we do? Well, when this candle closes, if we left a fair value gap in here, then that's something that we can look at, right? Let's say, for example, this candle, when we've got, well, literally it's just ticked 2 o'clock, hasn't it? So we've got a whole hour. Let's just say, for argument's sake, that price forms a fair value gap here when this candle closes. We can then drop down onto our lower time frame, right? If we believe price is going to have bullish momentum back up, then we don't need to guess, right? We can just wait for it to show us. We want to see price purge into here. We've got this lovely fair value gap here, for example, which we know is in the lower half of our premium discount. So we're down in discount, meaning that it's favoring longs. And then we can just monitor this then. Yeah, what do we want to see? We get our break. Yeah, this is our displacement leg. We look for our fair value gap in the bottom part of that, price to pull back into that. And then we've got an immediate target here. And then as we look up, we know we've got our target, which is our main target resting here. All right. So I hope that's been helpful on Hbar. I know we spent a bit longer on that as well, but I think it was a really good question from McRaw about compounding trades, because I know a lot of people kind of get FOMO about trades and think like, I've missed a move, I stay out of it. You've got to do that. Craig, thanks so much, buddy. I hope you enjoy the rest of your day. Okay, let's just, I'm a man of my word. Let's take a quick look at FTM and then at Shib as well for you guys, all right? And we're going to try and rip through these in a couple of minutes. So FTM, nice clean chart. That's what we want to see. So oh, you're welcome, guys. Thanks for the lovely comments. Really do appreciate them. So FTM on the weekly is obviously looking a little bit ropey, as we can see. Uh, but again, look, even when you've only got this amount of data, look what's happened. Big sell-off, right? We've left this fair value gap here. This is where price is kind of now pulling back into. When we look at these lows here, we can see it's probably this that's capping the market. Yeah, that's capping the market to the downside, holding us up nicely there. Why do I choose that wick? Because the wicks come into here and none of these have managed to close below it. Yeah, so we've just taken out, swept that, then swept this and had this nice big bullish reaction, and we're now drawing up into this fair value gap. Where's our liquidity resting higher up on a weekly scale? Is here. Now just drop onto our daily very quickly. Let me just remove these old bits and pieces here. Same principles though, actually, funny enough, if I just delete all that, we can see what we were trading with the group here. This order block, see the displacement, price does come back down to retest this. Yeah, we're looking for this order block to hold, didn't even come into that, take out our market structure here on the lower time frames and then trade it up into this liquidity here, all right? But let's just do all this again. Always nice, I find, doing it from scratch. What's that? Ooh. Here we go. Right, so quick one on this. Take a sip of some very cold tea. Ah, delicious. Right, so what have we got? Here's our resting liquidity above the highs. Price has had this corrective move lower. What happened though, and this is what we're talking about looking at this on a daily scale, here we've had our shift. Yeah, shift in market structure here. Why? Because we've set that low. This was our last lower high. This is a higher high, right? This was the market structure break here when we've then come from a higher low and then taken that out. Something that we would want to see hold in here and certainly hasn't been respected as well as we would have wanted to see it respected, right? But that's our daily fair value gap. We would have ideally wanted to see a bit of a stronger move away from this price, come into this and then look to trade it higher. We definitely have got some good day trades in here. But the fact that this has kind of carved through this has definitely shown a little bit of weakness, right? So let's just mark up our levels. What are we looking for? This is the swing high that we would target on a daily scale. Above that, we've obviously got these ones as well. So let's draw that in. If we expect a purge lower, then this is our liquidity that's resting just below us here. Okay, so then we're going to dive into our daily. See, price has had this really nice recovery into this here. Not into our daily, sorry, our 1 hour. So we've got our daily targets resting up here. We've had this kind of grind down. Again, if we're looking for these kind of inverse fair value gaps or the fair value gap flips, yeah, that's what we were talking about. We can see that this one here, which was our bearish fair value gap, price has kind of come up into this. Price has come back up. Yeah, see how we've kind of got right through to the other side of it. We've held it, broken out of it. All right, again, we've had a very, very fast move up here, meaning it didn't really give us much opportunity to get in. So what do we want to do? Well, this is an area that we can now look for to be held as support, right? But while we're looking at our displacement, because we've had our closed candle now, we say to ourselves, right, well, where do we want to monitor? We want to monitor the inefficiencies that are sat in here. Yeah, so let's just do that. Bit of here. So we see that we're hoping that this is now going to act as a form of support for us. We've got the inefficiencies in here. Has price really taken out key liquidity? There's a lot of resting liquidity here. So on an hourly scale here, here, here. But we're leaving this in the hands of our higher time frame targets. That's why I like to revert to the daily in terms of a real draw on liquidity. It doesn't mean that price can't break down here, But it means that if we see what we want to see, which in this case is price coming down into here, yeah, and then we just want to see that shift. Yeah, we want to see that impulse move, price come back down, and then we can target higher, right? So price comes into this level, then we're looking again, right? That's our market structure break. Let's say, for example, this is in the 50% here, and this is where we get our fair value gap. That would be our entry, our stop below this prior swing low, the lowest of the two here. And then we would first of all look to trade it into these highs. All right. And then we've got our targets cut out for us here. We'd be aware of when we're coming into this level, but we wouldn't really need to be looking to trim anything there. If obviously we show a strong reaction here, we'd look back to how we compounded before. Yeah. So we'd basically be saying, okay, if price is putting back into here, right, then if we don't see that aggressive reaction we were talking about, right, if we see price kind of meander here a little bit and show a bit of strength, we can then look for a correction in this displacement leg for price to come into a fair value gap here and then start to target these highs. All right, so that's what I'd be looking at on FTM. And then let's take a quick look at Shib as well to close off for today. Have we got any squiggles on Shib? A couple of old ones. Right, weekly. Okay, this is quite nice actually. Straight away we can see on a weekly scale, price has now come back down and found a little bit, and now come down into this inefficiency, which is obviously on a weekly scale. Something else, guys, I should have said actually before is this, right? Which is when I'm looking on these scales, I'm saying to myself, okay, where have we taken liquidity from? Yeah. So we can see here we swept these highs. We've now had this reaction back down. So what we can say to ourselves is, right, well, if we now start to show bullishness here, then we've got our pre-made target here on a weekly scale. Yeah. So that's what we're putting across there. What else do I like about potential bullishness here? Well, I'm marking this up because there's obviously liquidity there as well, and price could very easily purge a bit lower into this, right? Take out this low, use that as fuel to move higher. On a weekly scale, though, we have just swept the prior week's low, right? Which is normally a bullish sign. So let's drop onto our daily. C-Rock is more of a lecture, it isn't a mere stream. Thanks, buddy. Yeah, well, I do appreciate it. A lot of people have dropped off, unfortunately. It's these things do, well, my fault, they do go on, but hopefully it's got a little bit of value in there for everyone. I do need to get better at keeping them a bit shorter, though. 1 second, guys. Right. So, because we've swept that prior week's low, we're now down here on a daily. We're going to do exactly the same, right? We're looking at where price is searching for liquidity, right? So we've got this inside bar pattern here as well. And these for me are always, always important, right? So this is our mother bar high, mother bar low. So remember, guys, you can also get a really cool, indicator on TradingView for free, which is which shows you your inside bar patterns. I think it's just called inside. I use it with some of my mentoring students, actually. Yeah, inside bar, just inside bar, IND standing for indicator / alert. Yeah. So if you guys are interested in this, by the way, guys, well, if you are finding value in this, remember these are recorded. You can access these through the Bird Nest YouTube and watch it back if you've got any things, and then you can kind of come along and ask any questions and bits and pieces in the community chat. So we've got this, and then if you flick this on, right, it shows you your inside bars. So remember what we were saying before, yeah, these act as ranges. What it shows you is the inside bar candle. So remember the mother bar comes before it, yeah? But if you pick any of them, they do start to look quite magic at times, right? So let me just I'm just picking this one completely at random, right? Completely at random. But look, here, what happens? Price runs the low, takes out the high, comes back to the low, purges out of the low, all right? and that's when the pattern then comes to an end. All right. So if you want to start picking those out, because they are very, very potent patterns, showing price compressing. We can see we're in a larger compression range here as well, right? But before I digress, we've got a really nice target here. It's making me feel like price is trying to move up for this liquidity, which doesn't look like a lot here, but as we move to the lower timeframes, we see that it really is. The fact that we've had this real compression here as well, you can see, even if you just kind of take this from here, just pick any high, right? But even if you just look at this and you go for a line of best fit meaning that, well, certainly for me, how I look at it is you've got two ways to draw support and resistance levels like this, your kind of diagonals. And that is, you anchor it from a point, you always have to anchor it from somewhere, in my opinion. And then you either have to respect the wicks, right? Meaning that this line would actually be going up, or you have it so that on these initial starts, you have to respect these as well. So for the candles that you've got, you can't just go cherry picking. See how this doesn't penetrate any of the bodies? Now this shows us some significance, right? Because you can just see price popping out above the top here. Now, doesn't mean it's going to. Look how many times it happened before, and all of these turned into deviations that ultimately ended up in price going a little bit lower. But it doesn't really want to go too low here, does it? Look at the absorption that we're getting in here. Yeah, look at the wicks coming up. Hey, just a dad. Legend. So look, you've got this. This is popping out. We've got clear liquidity's an upside target here. This is making me feel pretty bullish on Shib at the moment, actually. So drop down to our 4 hour. Look at this. We can see we got this nice move above, powerful close. We've got our displacement leg at the moment. We've got upside liquidity there. So look, here's our displacement leg. Here's our fair value gap that's down here, right, in discount. So what do we want to see? We want to see price coming into this now, and I'd move this onto a lower time frame. Again, I know I moved to a 5 minute, guys. I appreciate some of you would want to use a 15 minute, but again, right, you can see these patterns repeating on any time frame. Look, see how clear and obvious this is? This move? See this, right? So, often when you're getting chopped up in these little areas, you're just trying to force something. Yeah. Now, remember what I said. We want to see a sweep. Yeah. So we want to see liquidity taken out. Here, we've also got the same here as well, right? If you move that up to that one, local sweep. So we've met criteria there. What else do we want to see? We want to see our break or shift. Price goes up, then what do we want to see? We want to see that displacement, that energetic move. That to me is telling me the buyers have stepped in now. Yeah, powerful move higher. People often FOMO into these as well, which can be dangerous, which is why you obviously want to be saying to yourself, where's your inefficiency in the move? Price often likes to rebalance these. Does it sit within our displacement leg with down in discount? It absolutely does. So we would adjust this fair value gap so it sits within our parameters. Entry here, stops under here. No choice but to put your stops under there, even though I know it is a big way down. But again, you've got really clear targets, right? Actually, your targets are really, really high up, right? That's where you'd be looking to offload. So that's what we'd be looking for here, right? If we're saying to ourselves, well, if that's the case there, price is coming down, what do we want to see? We want to see price come into here, loads of liquidity resting under here, which is lovely. We see price come into this area, and then we would just look again for that break. Yeah. In an ideal world, you'd see a little bit of a sweep here as well. Yeah, you'd see that low taken out, right? But you don't need to have that. The key thing here is the energetic move higher and that you have that displacement, because that's the fair value gap that you then target when you come back down. And then you're moving up to your initial targets that are up there. All right. So I'm going to leave that on there and see if that's the kind of thing that we get with Shib. Obviously, if everything's still running a bit bullish, and again, we'll just close by just taking a very, very quick look at what Big Daddy is doing, which is obviously Bitcoin. Give it a second to load. We've got so much stuff written on this chart that it's certainly taking its sweet time. Here we go. So again, look, this is why we wouldn't have taken this trade here. Like we said, really, really appealing and tempting. Maybe it will work out, but the issue that we've got here is that we're at this key weekly level that's capping the market, and we've just got this resting above us. If we didn't have this here, I'd maybe feel a bit more confident about this move, but we've also not really seen too many healthy retracements here in this move higher. So again, this is our hourly level. If price is going to pull back into this, maybe that kind of suits the narrative for the other assets as well, in terms of looking at them and saying, okay, Bitcoin's now having a bit of a pullback. If we see it reclaim this area here and start to build bullish market structure, then I'd really be looking to pull the trigger on those other assets like the Hbar one and Shib as well. Anything that's got that potentially explosive upside, and we can go on to that. Right, guys, just a dad, tea drinking brother indeed. I'm actually going to go and make myself another brew now and probably throw down, well, I don't know, maybe a honey and lemon, actually try and sort this throat out a little bit, and then another brew afterwards. But look, apologies in some respect, because this has rattled on even longer than normal, but I think it was a really, really productive stream. I think a lot of you guys had some really, really excellent questions. Really appreciate all of you. In fact, there's just too many of you to name on this stream, but you know who you are. Anybody that's new to the stream, I hope you've enjoyed it. Thank you so much to everybody that joins into this every week. I'm going to be back now on Monday as well. And just one more thing to finish up with you guys. Do make sure, if you're interested in joining us over at the Nest, it's a fantastic trading community. Look, all I ever say to people is you can only try these things, right? And at the moment, you can get free trial. You can get a ridiculous access, I think, for like $99. I think you get a free hoodie. The position size calculator, which I do recommend you check out as well, guys, from Resume. So if you're interested in that, do pop over to the site. Go and look at Burb's Twitter. You can see it all on there, and you can find some stuff down in the description as well. Obviously, you guys can follow me on Twitter as well, BC Richfield. This is me here, BC_Richfield. Always reach out to me on Twitter, but do come and check us out over at the Nest. And as always, if you've got any questions, do line them up. I'm going to be live again on Monday. All right. And then we're going to take a look at Bitcoin and maybe a little bit of a focus on some traditional market assets as well. And then we'll be back for Alt Request Wednesday as well. All right, guys. Thank you so much. Wishing you all an absolutely amazing week. Take care of yourselves. Remember to manage your risk. And I'll see you guys around the Nest.